That is in, she's out of Bali. I believe she's in Singapore now.
Yep, that's right.
Slowly making her way back to Montreal. She'll be here next week.
Yeah, unless she stops over in Hawaii and makes a couple of other stops along the way, in which case, no. But
what a great excuse. Like, you would call in sick and, oh, I don't feel good. I have it. She called in and said, oh, there's a volcano erupting. I can't come into work. Like, who comes up with that kind of an excuse? So, my name is Dan Laxer, in for Chantal Desjardins. This is the CJD Real Estate Show. Terry Kilakos, as you know, is president of Northeast Mortgages and a chartered mortgage broker. We are on the radio. You could call us at 514-790-0800. Long distance, 1-800-491-CJD. You can text us to 514-800. And we're live on Facebook right now.
Facebook, that's right.
Absolutely.
Yep.
And we'll take all your calls and questions as we did last week. We do want to talk a little bit more about, we started touching on the second aspect of the mortgaging triangle.
Yep.
And we'll get into a little bit more of that today. But first, I know you wanted to look a little bit about what's happening on the market.
Yeah, absolutely. So the announcement this week, coming up actually, nothing's happened in the past week, is the Bank of Canada is going to be meeting on December 6th to talk about whether or not they're going to be raising the overnight rate. Now, all the indicators are pointing to no, they're not going to be raising the overnight rate. And the Bank of Canada has actually come out and said that they are going to be raising rates very cautiously over the next little while. So chances of them raising the rate are slim. Mm-hmm. It could happen. So we have to look out for that on December 6th. But the economists and basically all the indicators are pointing to it not going up.
Okay. What's the rate at now?
1%.
Okay.
Yeah. And what happens is you end up having the banks will charge 2.15, 2.20, 2.35 in some cases. Different banks have different charges that they'll put on top of the overnight rate, which gives us the prime rate afterwards.
Okay. Yeah. Now, that doesn't sound too bad.
No, it's you know what the thing is, it's actually not bad. If I rewind time to 10 years ago, when you looked at the overnight rate, I mean, it was hovering in the 3s, 4s. It was up there, and then the banks on top of that were charging 1%. So the overnight rate was at 4%, and they would charge an extra 1% on top of that, bringing the prime rates to 5%. What we've seen happen is as the rate has dropped over the last number of over the last number of years, the banks actually increased their spread. So they went from 1 to 1.5 to 2 to 2.20. So they've actually raised, or they've increased that spread that they had above the overnight rate. What's expected to happen is as the Bank of Canada starts to increase that overnight rate and it starts to push the 2.5% territory, what we should start seeing is the banks actually scaling back that extra that they were charging over the years.
Okay. Yeah. We'll find out more on Wednesday.
Sounds good. Yeah.
All right. The Real Estate Show with me, Dan Laxer, and Terry Kilakos of Northeast Mortgages. Now, a couple of weeks ago, you and Chantal started to talk. You started the discussion of the 3 elements required for financing. Mm-hmm. A couple of weeks ago, if I'm not mistaken, you talked about credit.
Yes, we did. And we're going to be looking today at down payments, which we were supposed to talk about last week. And today we were going to be talking about income, but we went off on a tangent like we usually do on our show.
But they were real estate and mortgaging tangents.
Absolutely. Absolutely. So, it was good tangents. So we went off on our tangent. So today we're going to be talking about down payment. And then next week we'll be talking about income.
Okay.
Yeah.
So equity. Now, what I have here in front of me is it doesn't matter what I have here in front of me. So down payment is this is the thing that if you decide we're going to buy a house, you're going to put away money for your down payment. Yeah. Because that's going to be the chunk of change you put down to say, okay, this is our house. Now we're going to start paying toward it.
Yeah.
Where does this money come from?
I've had over the years, I've had people come in and they basically tell me, oh, I want to buy this house and the money's sitting at home in cash. Mm-hmm. I've heard that. I've heard a number of different things. Oh, my boss is gonna give it to me. This person's gonna give it to me. That person's gonna give it to me. It's important to understand that when you're buying a house, like we've talked about before, the three elements, right?
Yeah.
The three elements work in conjunction with one another to determine what your credit worthiness is, or what you're going to be able to qualify for. So you have your credit has to be a certain score. Your down payment has to be structured a certain way. Your income has to be structured a certain way. It's important to understand that when you're talking about down payments, they have to be structured in a way that makes sense for the bank, right? You can't, because the down payment is the section where we got a WD-40 that
or Jigaloo or something.
Jigaloo, yeah, exactly. That was a plug for WD-40. So we gotta make sure. I'm losing it. We have to make sure that the down payments are actually structured correctly, right?
Mm-hmm.
And it's important that when we're talking about down payment, so when you're buying a house, the money usually has to be in the account for 90 days. So it could be in an RRSP, it could be in a savings account, a TFSA. It can be in any form of account that is in your name, but typically it has to be there for 90 days. And the reason why that rule is there is because it's for anti-money laundering purposes. So they don't want people to use buying houses and the down payments to launder money, right? So that's the first thing. That's important to understand. But that doesn't mean that you can't get a gift, for example. So if your parents or grandparents want to give you a gift for that down payment, you are allowed to get that, but it has to be documented.
Linda actually just texted in to ask about that. Can my parents give me a down payment? And you're referring to it as a gift.
Yes.
And that's fair. That's important.
Very, 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 very important. It needs to be structured as a gift. It cannot be a loan. It cannot be something that's repaid. If it has to be repaid, then we have to have that number. So the whatever it's going to be, that monthly repayment has to go into the calculations of your debts. Okay. If you qualify, then that actually is a different program, which is called a multi-source program. And the multi-source program allows you to receive down payments from credit cards, lines of credit, loans, different sources like that. But whatever that payment is monthly for it, you have to be able to qualify for it. Mm-hmm. So if you borrow, let's say, $10,000 from a line of credit, that's okay. The bank will allow you to do that. But that payment that they're going to take a 3% payment on that money, and as long as you're able to qualify with that amount on your debts, you'll be okay. So yes, you could borrow the money. You could be gifted from your parents or your grandparents. Some banks will allow it to come from siblings. Mm-hmm. Believe it or not, you're not allowed to receive a gift from a spouse, which is very bizarre. I've heard.
What's the thinking behind that?
I don't know. Yeah. It doesn't make sense to me, but a spouse is not considered an immediate family member. Maybe in the rest of Canada, a spouse is, but in Quebec, apparently it's not. Mind you, I say this, I have heard of a couple of banks allowing it, but it is rare, and it is by exception only that is done.
Okay.
Yeah.
But as you say, parents, grandparents, and they do allow siblings?
They do allow siblings, yeah, in some cases. Yeah.
And it's it has to be structured, as you say, a gift, because the bank can't know that you're on hold to somebody else aside from them.
Exactly. Okay. Exactly.
What's how big a down payment do we need at this point?
Okay, so this is one of the biggest misconceptions that people have right now. So I have people, they come in to see me to get pre-approved, and they're like, you know what, we're only thinking about buying in 2 years because we're saving up for the down payment. And I'm like, okay, well, how much do you have? And they're like, well, we've got, $20,000-$30,000. Okay, what are you saving? And we want to get 20% because the new rules say that we have to put 20% down payment.
Yeah.
You do not have to put 20% down payment. That's a myth.
Okay.
For some bizarre reason, I don't know where this came from. People think that the rules changed and now people have to put 20% down payment. That's not a fact. If you're buying a single family home, a condo or a duplex, it's 5%. That's the minimum down payment. It's been like this for years, since 2008. It's going to stay like this probably for the good long while. If you're buying a triplex or a fourplex, it's 10%. If you're buying above 4 doors, so 5+ doors, it's 15% down payment. If you're buying a property to not live in it, so in other words, you're buying a triplex, you want to rent it out, it's for speculative purposes, that's 20% down payment. But
Okay.
if you're buying above 5 doors, it still remains 15%.
Interesting. Okay.
Yeah. The only thing that changed a couple of years ago with regards to down payments is when you're buying a property that's worth more than $1 million, it cannot be insured. So at that point, you need to put 20% down, but that's not a lot of people in the market that are buying over $1 million. So it's not applicable. And if you're buying at over 500,000, basically what happens is it's a two-tier down payment. So the first block of 500 is at 5%, and the second block of 500,000 is at 10%. Anyways, we'll go over it a little bit more in detail after the break.
Absolutely. We're talking about down payments and equity, the second element, or is this the third element now of the mortgaging triangle?
It's the second.
It's the second. Yeah. Depending on where you started. My name is Dan Laxer. That's Terry Kilakos of Northeast Mortgages. We got calls coming in at 514-790-0800. We've got texts at 514-800, and you can also hit us up on Facebook Live. That's where you are right now, as well as on CJAD. It's 1:15, and Curie Yeager is at the CJAD 800 Traffic Center.
There's a good delay right now for the inbound Champlain Bridge, a 20-minute delay, maybe even a half an hour now, because it looks
So what do you think, Kumar?
Oh, it's super cool. I've never been in a reggae studio before.
It's the best.
What's up, John Nevis? Giving you a shout out. And Nicola. Sorry, a couple of shout outs out to the peeps. Was it actually hot, the mic?
Yeah.
So everyone is wondering if I actually have someone that works at my office that's named Kumar, and he's actually in studio with us right now. You want to come on this side?
Come on that side?
Come on this side.
This is the proof is in the pudding?
Yeah, you see? So again, I go back to what I was saying last time. See, this is Kumar. Okay.
Oh, this
You
side?
can go behind Terry because
Yeah, there you go. See, this is Kumar. And as I said before, we need a herald in our office. So for any heralds that are out there and they're listening, call us 514-680-4674.
It's frozen on my computer.
I'm such a terrible human being.
got a couple more shout outs out there.
Love you too, Joey. Oh my god.
Mine's frozen.
What, your computer?
Yeah.
You know why?
No. Okay.
Because you're
It's
cold-hearted.
a still shot of us.
So did you find any jokes for us to entertain the
I
Facebook
found a few
feed?
lame
I did
real
not.
estate jokes.
Did you?
Yeah, really lame ones.
What, like what?
I don't know. Not at all worthy of saying.
Actually, you know what we should do? I know that people want to see what's happening behind. So what I'm going to do is I'm just going to do this. I'm going to rotate the camera. And now you can actually see the full studio here. Take a look.
Poor May Rub, she worked so hard to position the camera.
And now...
There
we go.
Okay, I'm going to work on this again. Oh, Dan, he's always cut out.
So Kumar, you actually thought that we were serious here, right? Like...
Oh, when I listened to you guys on the that's how I came to Northeast. I was like, wow, this guy's so intelligent. I got to work for him. And then when I came in, I was kind of like, the first interview was very,
Did you meet Terry or me?
I met Murad.
Oh.
Actually, you know what? When I was at a golf tournament, when Kumar had come in for his interview, this was like a year and a half ago or something,
Yeah,
right? 2 years
yeah.
ago? And Marav, I said, you know what? I got to be at the golf tournament. Call me if you need me. So she calls me and she's like, I like this guy. He's a good guy. So I get on the phone with him. First question I ask him is, if you're sitting at your desk and you get a Nerf ball off your head,
Are you fine with that?
are you okay with that? And he's like, I'm good. No.
Sorry, I got into
So you were hired.
And he was
that was
hired
it.
because he was like, yeah, I don't have a problem getting a Nerf ball off the
And
head.
since then, how many Nerf balls have been bounced off your head?
If we call Nerf balls, maybe like 2 or 3, but there's been many other objects that have been
Oh,
thrown.
yes.
Yeah.
Staplers and...
No, not yet, but footballs, some Super Bowls.
Yeah.
It's a fun office.
Yeah. Golf balls a couple of times, but not. We try not to hit anyone with the golf balls.
Yeah.
Yeah, because the golf balls hurt. They bounce well, but they hurt.
Yeah.
So we have a call. Was the executor of estate trying to sell
A property.
Yes. And John wanted to give a... Can we revisit the credit card?
Presents The Real Estate Show with Dan Laxer and Terry Kilakos. Brought to you by Northeast Mortgages.
It's 1:20. Welcome back to the CJAD 800 Real Estate Show. Terry Kilakos is president of Northeast Mortgages and is a chartered mortgage broker here in studio with me. And Terry, of course, we started off the show talking about down payment, equity. And we mentioned briefly, we talked about how if you get money from a family member, it has to be declared a gift. You also talked a little bit about credit cards and lines of credit. And John texted in asking, can I borrow my down payment from my credit cards?
Yes, you can. But again, you have to be able to qualify for that mortgage, having that debt on your credit bureau.
Okay.
So yes, you can.
So as long as you can cover it. Okay. There's your answer, John.
By the way, that might change over the next little while. With the new mortgage rules that are coming into effect, banks are no longer allowed, because banks, what they were doing is they were giving loans to people to cover down payments, and effective as of December 31st, that is not going to be applicable anymore. So a bank is not going to be able to give you a loan, a line of credit to cover you for the down payment. Mortgage brokers, however, will still be allowed. So,
would you say that it's becoming little? They're making it easier or more difficult for someone to buy a home?
Don't get me started.
Okay.
It's going to be a whole show that's going to be me ranting about how idiotic our government is about what they're doing.
I will tune into that.
Yeah.
We're also taking your calls at 514-790-0800. Howard is calling from Pierre Fall. Hi there, Howard.
Hey, Howard.
Hi, how are you guys?
Excellent.
I have a question.
Sure.
So my mom passed away. I'm selling her condo. I'm the sole executor of the estate. Does there have to be some type of notarial document that transfers the property from her to the estate or to me, or how does that work? Do you know?
Yeah, I mean, when there's no mortgages that are involved,
There is not.
yeah. So theoretically, a mortgage is the only thing that really needs to be on notarial minute. Everything else can be done with, you can do it yourself, or you can do it at what's it called, with a lawyer. But it's a lot more involved. I mean, I tried a little while ago to get some land up north without you going through a notary, and after about, I don't know, a month or a month and a half of frustrations, I was like, forget it. I was like, I'm not gonna do this. My advice to you: use a notary.
Okay.
Get a notary involved, have them take care of everything, or get a lawyer involved who chances are will end up going and use a notary. So just go directly to a notary. It'll be cheaper than going the lawyer route. And no offense to any lawyers that are listening. Go through a notary. You'll get everything taken care of. You're going to have a lot less frustrations.
So I will use a notary, but what is the notary doing? Are they transferring the ownership to the estate?
Yeah, absolutely. Yeah, so they're going to take care of doing all the transfers. They take care of making sure that, obviously, just because there's no mortgage on the property doesn't mean that there's no previous mortgage that's been registered at some point, right?
Right.
So at some point, maybe your mom might have had a mortgage on the property. It got paid off, but it was never radiated.
Yeah.
So all that stuff, you want to make sure that the notary's taking care of it.
Last question.
Sure.
The house was used as collateral towards or security towards a line of credit, and there's money owed, so I'm assuming...
Oh, so there you go.
So I know that. So
Yeah.
I'm assuming, obviously, we have to pay back the bank the amount that's owed on the line of credit before the house can be cleared to sell.
Definitely, absolutely.
Okay.
So you just, Howard, I just want to say one thing. Before you had mentioned that there's no mortgage, right, on the property?
Yeah.
But then you said, oh, there's a line of credit.
Yeah, so there is a mortgage.
There is a mortgage.
Yeah, and
Okay.
I do have a copy of it. I
Yeah.
have it, yeah.
And that, by the way, is classic. The way that the banks will spin home lines of credit, they'll make you think, yeah, it's no problem. It's like a personal line of credit. It's all good. It's a mortgage.
Oh, I
It's
know
just
that.
a different type of mortgage.
Yeah,
okay?
and they have first rights to basically get their money back before the house is allowed to be sold.
Exactly. So, yeah, definitely you need a notary.
Okay, thanks
All
very
right.
much. I appreciate it.
No problem. Be
Thanks
well,
for the call,
Howard.
Howard. You can do as Howard did at 514-790-0800 or on your cell phone, I don't remember the star talk. I don't remember what the numbers are here anymore. But you'll figure it out. We've talked about the credit cards and the lines of credit and the gifts. What are some of the other sources of a down payment?
Okay, so you can, like we said, you can take it out of your RRSPs.
Yeah.
The money has to be sitting in the RRSP for 90 days. So when you take the money out of an RRSP, that's called a RAP, Régime Accès aux Propriétés.
Nicely done.
Thank you. Office de la langue française would be very proud.
Good man.
Or the home buyer's plan, okay, in the rest of Canada. You're able to take $25,000 out of the RSP. Of course, you have to have the money in there when you're taking it out. You have 15 years to repay that money starting from year 3. And you have to pay back every year whatever you took out. Oddly enough, that repayment back into the RSP does not get calculated as a debt. Because if you don't pay it back, the only thing that happens is that money that you were supposed to pay back that year basically gets tacked on to your income for that year, and it's taxed. So it's all good. And like I said, you can take it from a TFSA, you can take it from a savings account, you could take it from a whole kind of plethora of places. What we like to do at Northeast, when someone comes in and they have, a down payment that's sitting in a savings account or a TFSA, we always try, especially if we have some time ahead of us, we try and structure the down payment in such a way where it ends up giving the client the biggest return, whether it's fiscally or interest or whatever.
All right, we'll get into a little bit more. We got to take a quick break. It's the Real Estate Show on CJD with Terry Kilakos and me, Dan Laxer. Back in a sec.
Wrapped in Red is on at Rod.
So we have, what about forgivable loan with no terms of repayment? So that's a good question.
By the way, Dan, that's 514-800.
That's the text.
Yeah, because you said text, start.
Star Talk is I couldn't remember
It's the traffic, right? Star Talk.
They're gonna
No,
call.
that's Star 800.
Terry Yeager.
Story 2 for Star Talk.
Kira Yeager's gonna be like, stop calling me.
Does this break take us to news? Okay.
It's a big misconception when you have a line of credit.
I know.
There's no mortgage.
Oh, wow, you just got a really long text.
Take a look at this.
It'll take us half the show to read this text.
Is it?
Hi, Terry and Dan.
How
My
come I
parents
don't have it?
passed away and our mom passed away last December 20.
Okay, take a look. So have a seat.
It's only
So-
gonna be split in equal 3.
So basically, okay, I have over here
Don't say anything bad. The mic is.
Facebook,
Hot.
right?
Yeah.
So we have the Facebook, which is open over here. This is the text when they're coming in, so we get to see what people are texting.
So the first time we got a
This
Facebook comment
is
saying, "By the way, your
all
mic is
the,
hot." No, they said mic is
all the
hot.
calls that are
So
coming in, so I
Chantal
know
says,
there's
"Whose
a
mic?"
guy Steve from Montreal. He has a line of
That's
credit
pretty funny.
question for down payment. There's another one that's coming in right now that's being set up, Niazi. Is that you, Dan?
What on the?
Queasy
Oh, yeah.
West Island.
Yes.
And that's it.
Maybe you can summarize the text you got so that.
Yeah, I know. It's really long.
That starts the stack,
Yeah,
and you just go from top to bottom.
exactly.
Cool.
Yeah.
So where the magic happens.
Yeah.
Are you still reading, Dan?
Yeah.
It's not
You
that
just
long.
summarize.
No,
Hi,
but I'm
Terry
trying
and Dan, my
to
parents passed
kind of
away.
understand it.
And our mom passed away last December.
I can't believe you do this from your phone.
Mom is
Yeah,
going
it's
through
funny.
this
Crazy.
good. My brother
It's
is
like-
on
And there's a delay.
to the bank to acquire a mortgage. He owns a bungalow with his wife elsewhere. Would it be possible to have his present mortgage he may already have and renegotiate to have his current bungalow and duplex as one mortgage and get to share and we can own his bungalow and duplex?
What
Please don't mention my name on air.
What you suggest best?
Yeah, well, we can read that. It's actually a really good question.
Yeah.
It's good. We could do that. We have Niazi from the West Island who just hung up, and the Stephen from the line of credit.
So should we take the call first?
Yeah, we can take the call. Yeah, because it's in line with the down payment.
And now with the latest from the CJED newsroom, here's Luciano Pipia.
I love Luciano. I love Luciano.
Just lost his mom.
It's pretty sad.
35-year-old man's son and grandson of the victims is in custody. Montreal's new mayor is about to make her international debut.
Oh, and
Tuesday, Valérie Plante will be in Chicago to attend the North American Climate Summit alongside other leaders from the U.S., Canada, and Mexico.
No, I was just gonna say.
Paris, where she'll attend a conference organized by the International Economic Forum.
I realized the mic is hot. By the way, did you hear a new study about the solar system?
Oh no, please don't.
Oh, not allowed to say it?
Has to be good.
It's about one of our planets. You can imagine.
The seventh planet.
The seventh planet.
Terry, leave the comedy to the comedians.
It's filled with
please.
liquid and gas.
No, please, Terry.
Oh boy, here we go.
Andrew Carter once had I don't know what you call him, an astronomer, astrologer on the air, and he was trying hard to get him to say it. Kept saying the seventh planet, the seventh, and he finally goes, "Oh yes, of course, the same thing does exist on Uranus." And Andrew was so disappointed.
Because he said Uranus?
Yeah.
And there's a 10-minute delay. The other delay is on the inbound Champlain Bridge. It's a 20-minute delay from.
You're such a child.
It's weird because there's the delay, and I'm watching myself talk a few seconds ago.
I'm listening to triple delay. I'm listening to you guys live. Then there's a couple second delay in my ears, and then there's like a 5-second delay on Facebook.
That's why you
Live.
keep giving us these signals that we can't figure out what to do with.
I'm looking for mortgage for real estate jokes, but they're terrible.
They're super terrible.
Mortgage jokes?
Real estate jokes. There's a few shout outs, Terry, and I think there's some Facebook questions.
Stay on top of the news and your favorite CJAD 800 shows.
No, you stay on top of the news.
What's up, Tracy Lucas? And Danny Ramos.
There's a bunch more at the top.
Hey Terry, nice to see you doing well. Been a while. How many years after a bankruptcy can we try to reapprove? Depends on credit score and how much percentage we need. So, 3 years after a bankruptcy, you're actually able to apply for a mortgage again after you've been discharged, provided that you've actually started to rebuild your credit. So the best advice that I can give on anyone that is in a situation like that is you need to structure yourself so that right away, once you're discharged from the bankruptcy, you start to actually rebuild that credit. Kumar's like, "Oh, are you talking to me?"
I was nodding. I thought this was a learning moment.
Yeah.
Goodness.
So the okay, so Facebook is like really terrible on this computer. I don't know if it like needs an update. The
Don't know.
is El Terrible.
No, that doesn't make sense what you're looking at. Look at it on your phone. It makes more sense.
Why?
Because that's how I'm able to see it so much cleaner than on the computer.
Really? I was trying to find real estate jokes.
Oh,
You
no, there's
remember? It's too bad Flaherty passed away because we can't run that Flaherty joke. Remember that parody, Flaherty's Mixture?
Oh, that was Rick Mercer.
Rick Mercer.
Yeah, sure.
Yeah.
But is it still valid? Is it still
I don't know. I thought
current?
it was funny.
It was funny, yeah, but it was current.
Well, Flaherty, they kept changing things, right? To heat
Yeah.
up the market, to cool off the market. So, yeah.
All right.
I liked Flaherty.
Thanks, Joey. Thanks for being on my side.
When we were house shopping, we went to a house in Hampstead, and the real estate broker, an old guy, and he points to this. We're in the big front room, and he said, and I quote, "This room could be used for whatever you want to use it for." I went, great. What does that mean? But he was trying. He really wanted to sell the house.
That's funny. And here we have a room which could be used for
whatever you want to use it for.
I think you're back, guys.
We're back.
Yeah. Thank you, Mayra.
I'll be back.
Wait a minute.
And Terry Kilakos, brought to you by Northeast Mortgages.
It is 1:35 and we are live on CJD 800 and live on Facebook Live. And we're taking your calls and your texts, 514-800. We got a couple calls we need to get to. Hi there, Stephen. Welcome to CJD.
Hey, guys. Thank you for having me. Very interesting show.
Thanks, Stephen.
Good to have you on.
Quick question for you, Terry.
Sure.
I just bought a condo on pre-sale for delivery in 2019, and I was approved for my mortgage. And I have all the money in my bank account now for my down payment, but I was thinking of using my personal line of credit for part of the down payment, just so I could keep my position in my TFSA and my investments in my personal investments, so I don't have to use them and lose my position there.
Okay.
Do I have to tell the bank that I'm thinking of doing this? And is this a smart move in your educated guess?
Well, look, think of it like this, okay? You could tell the bank that you're going to be using the line of credit. They shouldn't have an issue with it. Not if there's an official answer to this and there's an unofficial answer to this, okay? The way that I would set it up personally, because you got to keep in mind, when you use money out of your line of credit right now and you use it to buy a house that you're going to live in, it's not tax deductible, correct?
Yeah.
Okay, because that money, that interest that you're paying on that money has been used for personal gain, right? So it's just like if you take that line of credit and you go on vacation with it, you can't write off that interest. So nothing stops you from saying, well, you know what, I'm going to use my money that's in my TFSA, wherever it is, from my investments. You use it, you buy the house with it, and then you go in and you take the money out of your line of credit and you put that money right back into your investments. Now, what's the purpose of using that line of credit? The purpose was not to buy a house, it was to buy investments. So because the purpose was to buy investments, you just made that interest tax deductible. Okay, so it's just a little bit of a, I'm giving you the tip of the iceberg of how we educate our clients on how to structure things, right? In terms of down payments and stuff like that. The other thing that you want to make sure of, because your condo is only being delivered in 2019, you have to make sure that you actually qualify with the new mortgage rules. Because although your mortgage is approved right now, if it doesn't fund within 120 days of January of 2018, you're going to have to fall under the new mortgage rules. So you got to make sure that all that stuff is set up for you. If you want, like I said, give us a call at the office. You can come in. We'll sit down together and we'll look at everything, including the down payment and the new mortgage rules and everything like that.
That's great. Thank you very much. And I don't know if I could squeeze in an extra question here.
Sure.
In your opinion, would it always be smart to go with more than less in terms of down payment, even though the minimum required would be 5%, as you said before?
If you're buying an investment property, you want to put the least amount of capital as you possibly can out of your pocket and get the most amount of yield back, right? But if you're buying a principal residence, and if it's not structured correctly, you want to get rid of that mortgage because the interest that you're paying is useless, right? But again, it all depends on if the money that you have sitting in your investments, if it's giving you a bigger return than what you're paying out, then keep it in your investments and put a smaller down payment. But if you have the money sitting in a bank account and it's giving you 0.5% of interest, if that, then at that point, and you're paying 3% interest on your mortgage, it doesn't make sense, right?
All right, thank you very much.
No problem,
right.
Stephen.
Thanks for the call, Steve. We'll get to Stanley's call in just a sec, but I wanted to read this text. It's a little bit convoluted, but we'll get through it. This gentleman says his parents have passed away a year ago, so last December 2016. His parents' home is going to be split 3 ways between him and 2 siblings. His brother, let me see now among us, My brother is one among us who will keep the house, and he will give the two of us our portion.
Mm-hmm.
He hasn't gone to the bank to acquire a mortgage. He owns a bungalow with his wife elsewhere. Would it be possible to have his present mortgage?
Mm-hmm.
He may already have a renegotiable. There are no commas. His current bungalow and the duplex as one mortgage. So we can get our share, and he would own his bungalow and the duplex.
Yeah, you can. It's called a cross collateralization. Okay, so you could theoretically cross collateralize across two different properties on a mortgage. In a case like this, I wouldn't do it because you don't want to mix revenue property with the principal residence. So I wouldn't necessarily structure it like that. Personally, the way that I would structure it is, there's a portion that belongs to him, so that's the down payment, and then you have the other two portions that need to come out, so that he has to give to the siblings, and that's what would be set up as a mortgage. And that's it.
Okay.
Yeah.
Pretty simple for a convoluted question. Yeah. Hi there, Stanley. Welcome to CJAD.
Terry, good afternoon.
Good afternoon.
I don't know if I misunderstood you or not.
Mm-hmm.
On a credit card,
yeah,
you said it's not good to pay off the total balance every month?
No, I didn't say that.
Oh, because you said it affects your credit rating?
Oh, no. Okay. So you're talking, I didn't talk about that today. I've talked about that in the past.
Last week or 2 weeks ago.
No, it doesn't, no. I didn't say that it affects your credit rating. What I said is when you're rebuilding your credit, when you have a credit card, let's say you have $1,000 limit, right? You have this $1,000 limit and you end up spending $100 on that credit card, and you take that $100 and then when the bill comes next month, you pay it off. If you pay it off before a certain time period, what ends up happening is that credit card will never report that there was a balance on it. Okay, so it depends on your timing of the month. So if it doesn't report that there was a balance on it, what ends up happening is it'll never report properly on your Equifax.
Okay, so that means that if I get the statement today and I pay it tomorrow, it's no good. I should wait a week?
Well, it depends on your credit card, and it depends on
the credit card has got a very big limit. Okay.
Yeah. So what you want to do, if it's to grow your credit, so if you want to
no, I don't want to grow my credit.
Okay.
There's more than enough credit. I'm just saying, if I have a $3,000 or $4,000 balance, but I pay it every month. I use everything on the credit card.
Perfect. You could do that. That's fine. You're okay. It's for people that want to grow their credit or want to rebuild. What you want to do is you pay off 50% of it one month and you pay the other 50% off the next month, and it'll report positively and you'll be good to go. Because at that point you actually have credit. You're in a credit position. All right.
Very good.
All right, Stanley.
Thanks for the call, Stanley. Glad we could put his mind at ease. You ready to have a fight with a listener?
Yeah, let's do it. Come on.
All right. Mary, it says here you disagree with Terry's advice.
Let's do it.
Oh, I'm actually a little grumpy. I'm stuck in traffic, so forgive me.
Where are you stuck?
Décarie. It sucks so bad.
Oh, my God, yeah. You know what? It was funny. I was telling Kumar, who's in the studio, I said, whatever you do not go down the Décarie Expressway because you're going to be in for an hour.
Should have called Mary, too.
Yeah. Talk to us, Mary.
It's just the tax deductibility.
Sure.
If you're borrowing to invest, if you're borrowing to invest in a tax-free savings account, you can't deduct your income tax, your interest rate.
Absolutely, yeah, for sure, because you can't double end it.
That wasn't clear when you were talking to that gentleman, so I just wanted to make sure that nobody goes out and borrows from a tax-free savings account to put it because it will be denied.
Yes, you're right. Absolutely, you're 100% correct. You can't double dip by putting it into an RSP and a TFSA. So
that's all. Have a great day, and
thanks,
wish me luck here.
Good luck, Mary. Thanks for calling CJD. That was sort of disappointing and anticlimactic. I was hoping there'd be some fisticuffs.
I know. I was ready. I was getting whatever. I was going to say something.
So what was it she thought you had said?
Okay. What happens is RSPs and TFSAs will already give you a tax advantage, right? So just by the nature of that type of structure. So by borrowing from a loan or borrowing from a wherever you're going to borrow, and then you take that money and you dump it in a structure that is already saving you money on taxes, it's not tax deductible.
Okay. Okay.
The interest that you're paying on
to avoid double dipping.
Exactly.
All right.
Which I think that we should be allowed to double dip. That's just my personal opinion. If I was Prime Minister, just saying, putting it out there.
Terry Kilakos for Prime Minister.
I can see it.
All right, it's the Real Estate Show on CJD. Terry Kilakos, as you know, is president of Northeast Mortgages and a chartered mortgage broker. My name's Dan Laxer. The numbers are 514-790-0800, Star Talk, star 8255 on Bell Mobility. You can text, and you can even hit us up for questions on Facebook Live. We're back in a sec right now from the CJAD 800 Traffic Center. Here's Kira Yeager.
The most significant
Thank you, George, for that comment. Much appreciated.
He says you're a wealth of information. You get it? That's almost like a financial comment.
Yeah.
See what I did?
That's a double entendre.
A double entendre.
Is it an entendre or entendre?
I think it's an entendre. Entendre.
Yeah.
It's from French. It's the French word entendre, but in English. So we say entendre.
Okay, so
I'm so glad the viewers are listening to this.
So check this out.
Yes.
Right? You know all these things that are... And no, I don't want to, belittle all the sexual harassment stuff that's been going around, and I know that...
Okay.
Please don't go there.
My wife, please don't go there. So I saw this cartoon this week on Facebook, which I thought it was really funny. Anyways, it was... you remember, what was that? The skunk.
Pepe Le Pew.
Pepe
Yes,
Le Pew.
I saw
Did you
that.
see that?
Yes.
Another celebrity gets charged for sexual harassment, and it was Pepe Le Pew.
Yeah.
I thought it was hilarious. Does everyone remember Pepe Le Pew, or am I like the only person?
No, absolutely.
Yeah.
But if you think about it, that's exactly what Pepe Le Pew is doing.
Yes.
Yeah, absolutely.
Groping and coming on strong.
We're getting so sued.
Where are you? Who? By
Hey, look at that. Look
who are we
at
getting
what's on the
sued by?
TV.
Fritz Freeling and...
And right now on CTV News, sexual misconduct in the workplace. Multiple prominent men in powerful positions face accusations, including Pepe Le Pew.
So we're going to see Pepe Le Pew going, I'm very sorry, but I'm going to rehab. Have to make amends to my family and all the people I've hurt in France.
Not bad.
Pretty good. Pretty.
I like the French that they had on Bugs Bunny. Because it was like, Monsieur le Dog, pourquoi les voulez spiller le white paint on le moi? Right? The cat would say, les mew, les meow, le purr, les mew.
I'm so glad people are learning something interesting during the break.
No, look. Pepe Le Pew lived in a house. He had to have credit and equity. No?
That's true.
That's right.
All right.
And Le Meow was the...
Le Meow. Le Meow.
She was like a homeless cat.
Onig said, no offenses to the news update, but this is better. Oh my god. So we have one more show. So next week we have one more show that's going to be broadcast. Then we're taking a break. And then we're going to be back again in January 14th. Yeah. And if Chantal manages to make her way back from vacation, she'll be joining us.
No, she left Bali actually.
Yeah, she's in Singapore.
She got to Singapore finally.
Yeah.
60 years they're waiting for it to erupt, and it erupts during her vacation.
Yeah.
That's like when your parents went to Vegas. Her parents go to Vegas and it snowed. And they're like...
In Vegas?
Yeah, and they're like, it's been 200 years that it hasn't snowed in Vegas. And they're like, great, it snows when we get here.
During our vacation.
How does it snow in Las Vegas?
I don't know.
Weird.
Now, News Talk Radio CJAD 800 presents The Real Estate Show with Dan Laxer and Terry Kilakos. Brought to you by Northeast Mortgages.
And that's where Terry Kilakos is president of Northeast Mortgages. He's also a chartered mortgage broker. My name is Dan Laxer. And we've got calls pouring in. This one about mortgage insurance from Jimmy. Hi there, Jimmy.
Hi, guys.
Hey, Jimmy.
How can we help you here on the Real Estate Show?
So I just want to know, Terry, what's your opinion on mortgage insurance? I mean, you've mentioned before putting the least possible down, so I'm assuming that you're okay with taking mortgage insurance. Just to put you in context, my situation, I have, 5-10% ready to go, and I would like to buy a threeplex and live in one unit, rent out the other two. Now, what I've been doing is I'm renting, and I'm just saving money to hit the 20%. But in your opinion, is it better off just taking the mortgage now, paying the mortgage insurance, instead of for sure?
Yes, and I'll explain. And I'll explain to you why. I'll give you a perfect example of a gentleman who I had met with about 5 years ago, maybe more. It was fairly, or no, it was probably like 8 years ago. Anyways, I met up with him. I pre-approved him. He had 5%. He was ready to go, and he goes, "No, I want to save up that 20%." So year after year, he was putting money away, but year after year, the price of real estate kept going up and up and up and up, and every month he's throwing away money onto his rent, right? Finally, I think 6 or 7 years after, he ends up buying this house, and it's a lot more expensive than what it was had he bought it way back when, number one. The money that he spent on rent was astronomical. And when all he could have, all he had to do is just, he takes the 5% or 10%, he puts it down, buys his place, and he's good to go, right?
Okay.
So you have to be, this is, if you're going to be saving up for a year to get that 20%, okay, I can buy that. But if you're going to be saving up for 3-4 years and you have to spend money on your rent every single month, it's not worth it. Just pay the mortgage insurance.
Got it. And I mean, if I'm willing to take the mortgage insurance, in that case, should I be putting the least amount down possible? I mean, I don't think there's much of a difference in the premium whether you put 5% or 9% or 11%.
Exactly.
I mean, okay.
So basically, you have to keep in mind, when you're putting a down payment, always put a block of 5. Okay, so for example, you're going to go 5%, 10, 15, or 20. And the logic behind it is if you put 9.99% down payment, you're going to pay the same CMHC premium as if you put 5%. If you put 13% down, it's going to be the same CMHC premium as if you put 10%. And if you put 17% down, it's going to be the same CMHC premium as if you put 15%. So you always want to go in blocks of 5. And if you, let's say you have 10% available for down payment, but that's all the money you have, don't put 10%, put 5. Because when you're getting into a new house, you want to make sure that you're going to have that liquidity. You never know what happens. You need a new fridge, stove, you have your welcome tax. You have a lot of stuff that comes up. So you want to make sure that you have that flexibility.
Sounds good. Thank you, guys.
No problem.
Right. Thanks for the call, Jimmy. And this is Dennis.
Hey, Dennis.
Hi.
How can we help you on the Real Estate Show?
Yeah, my question is this. I'm trying to buy a mortgage. I got the down payment.
Yeah.
So I expect to buy a house is for about $200,000.
Mm-hmm.
So my question is this. I'm being told that when you buy a mortgage, so there are some other taxes that comes after, regular, that you pay every month. So I just want to know what are some of these taxes.
So obviously when you buy a house, you have property and school taxes that you have to pay. When you first get into the house, you have what's called welcome tax. Excuse me.
Yes.
You have what's called welcome tax, and welcome tax, that goes obviously to the municipality. And then if you have a CMHC-backed mortgage, what ends up happening is when you go to the notary to sign, there's a 9% tax that is actually tacked on top of the CMHC insurance that you have to pay at the notary. But aside from that, and obviously there's adjustments and stuff like that when you're going to buy your house. So, I don't know, for example, let's say you buy your house in August and the people have paid the taxes for the whole year. When you buy that home, you're going to have to pay the adjustments of the property taxes that they had already paid. But that's it. In some cases, the bank might pay your taxes for you, the property and school taxes. And if they're paying your property and school taxes, then what ends up happening is you will pay that tax bill monthly with your mortgage payment to your bank. but that's it. There's nothing else. There's no extra tax. It's just how the taxes are structured.
Okay. The welcome tax is high, say just once or every year?
The welcome tax is once when you buy it, and usually you get it about 2 to 3 months, depending obviously on the municipality. You'll get it about 2 to 3 months after you move into your home. I bought a house in Dollard last year. I think I got it a week after I moved.
There you go.
They were very quick, but you have 30 days to pay it.
So, but can you make a promise? So, can you make a payment plan with that? With the tax?
Yeah, it does. I mean, the municipalities will give you usually a year to pay things, but the best advice that I give anyone, you want to make sure that when you're getting into your home, you have that money to pay the tax bills, to pay whatever needs to be paid. Besides your down payment, I always advise people to have about 1.5% extra that could be used for miscellaneous stuff. If you don't have that, you can end up setting yourself for a lot of stress and a lot of aggravation.
Okay.
All right, Dennis, thanks so much for the call. I hope we helped. We got a couple of minutes left here on the Real Estate Show, Terry. I wanted to answer Frank's text from LaSalle, but first, if people want to reach out to you after the show, how can they reach you?
So call us at the office, 514-680-4674. You can visit us online at northeastmortgages.ca or facebook.com/northeastmortgages.
There we go. So Frank is texting in from LaSalle. He says, I'd like to sell my triplex, all paid up. Need to downsize. Best way to flip it to a lower rate and go to a condo or smaller house in 2018?
I prefer houses, personally. Condos are okay, but if you're used to living in a house or a triplex and you're going to downsize all of a sudden to a condo, it's very different. It usually takes them years to adjust, unless you're obviously buying a much bigger condo, but they're more expensive. So I prefer a smaller house rather than going the condo route, but it's up to each individual person. Frank might be completely fed up of cutting grass and, taking care of a property, in which case a condo would be good for him.
Yeah.
But if he's okay with doing all that stuff, a smaller house will end up having more resale value down the line than an actual condo will. So a condo, you'll buy it, you'll spend, $150,000, $160,000, $200,000 on it, depending on obviously the size.
Yeah.
5 years from now, it's going to be worth almost exactly the same amount, just because there's so much inventory of condos on the market.
Yeah, that's it. So it does come down, as you say, personal preference, but resale value, absolutely.
Yeah.
And if that's a concern for Frank, then a smaller house.
Absolutely.
All right. Terry, we're out of real estate.
Again.
Absolutely. Thank you very much. Chantal is back next week.
Chantal is back next week, yeah.
Unless there's a volcano in Singapore, we don't know.
In which case she'll end up going to Hawaii, and then we'll see her in the new year.
Thanks, David Simon. Thanks, Marav Marciano. Thank you all for tuning in and watching on Facebook Live. What's up next? Some show on CJD, rather. The TED Radio Hour is up next on CJD 800. Have a great afternoon.
If I didn't have one already, my pillow would be at the top of my wish list. Since I love it and it's giving me such great sleep, I want my loved ones to have it too. And the holiday shopping's done.